IVM.
Have you invested in Super Saver funds on Paytm Money? These instant redemption liquid funds let you make withdrawals of your choice as and when the need arises. Upon redemption, the money gets credited to your account instantly within 30 minutes. It doesn't end here. The best part is that with similar flexibility, you get to earn relatively higher returns on your short-term investments than your regular bank accounts. These funds mostly invest in low-risk options to ensure the safety of your investments. Get ready to make the most out of your short-term savings. Download the Paytm Money app from the Play Store, get your KYC done and become investment ready instantly. Aap mutual funds ke liye bhi Paytm karo. Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and this is the Private Market Special. My guest is Nimesh Kampani. Well, this is Nimesh Kampani, president of LetsVenture Plus, and not the legendary investment banker, but we'll get to that. And on this show, we're going to focus on the private market from both the sides, the investor side and the founder side. And before we do that, we're going to start with LetsVenture Plus because they're a very interesting firm. Nimesh handles a relatively new part of it, but there's other stuff that they do that maybe we can get someone from them back on the show sometime. But on this episode, we're going to talk about the private market. The private market is stuff like startups, and founders looking for money, investors looking to invest money. And LetsVenture Plus is huge in that they've created a great platform. And we're going to start with exactly what is LV Plus about. So Nimesh, welcome to Paisa Vaisa. Thank you so much for doing this for us. Let's give us a very quick background to yourself and how you landed up at this LV Plus, right? Because you're not that very typical investor or that founder. You've got this great background on the banking side. Let's start from there.
Thank you, Anupam, for having me on the show. So I started with a very boring career to start with. I qualified as a chartered accountant and then joined banking. My first job was ICICI, which was like an MBA. I was there for 18 months, did work which anybody else would do in 5 years. Very interesting experience, interesting learning. And then bulk of my time I've spent with Kotak, more than 15 years. At Kotak, I was always doing strategy, looking at acquisitions, looking at growth, looking at organic, inorganic, across the financial services spectrum. So I had a lot of headway there. And then the previous 5 years, I was heading the investor relations function, which obviously gave me a complete perspective of the public markets and how they function. So having worked very closely with public markets, I think, and being a keen investor myself, I had also dabbled on my free time, which hardly you get in unlisted space and the startup space. Mm-hmm. So had done quite a bit of work there in terms of investments, in terms of mentoring some of these guys, and that's how I came in touch with LetsVenture and Shanti there, right? Mm-hmm. So I think we have been discussing and debating a lot of ideas, thoughts, and strategies, and then came in the entrepreneurial bug that I think we've done enough in the corporate life. Let's do something interesting. Let's create a business from scratch. And that's where LetsVenture fitted in very well because of my entire understanding of the public markets as well as the private markets as an investor side as well. And this idea seemed like something, which was the missing link in India because, that entire private markets experience was in some manner very private, right? So the idea was to democratize that. The idea is to organize that, use technology, trust, transparency to bring about, a complete, to be the private markets partner for investors, right? So that is what brought me into this, to be the professional entrepreneur to run LV Plus. And that's how I'm here. And if we go into the next question yours was on what is LV Plus, right?
Yeah, I'm going to just hold you there for a bit, Nimesh. I want two questions, right? Because it's possible that our listeners might not know what LetsVenture is about and who is Shanti.
Exactly.
So I want to ask you there. One is just tell us what year are you talking about when you started your interest in private markets? What was it, 5 years ago, 6 years ago? And for someone who's working at Kotak, what drew you into that market? And then once you give me that answer, just give us a very brief mention about the work that LetsVenture does and who are the founders there.
Exactly. I started in this space somewhere around 2014-15, right? since obviously you were in a space where you had global exposure there, and you were seeing what was happening in the West, like Silicon Valley, and the opportunities that was sitting out there. So started dabbling a bit here in India as well. I think it was still an undiscovered market. You didn't have too much happening here other than a few unlisted opportunities that were there in the market. And that's when I heard about LetsVenture. LetsVenture was started in 2013, right, by Shanti Mohan and Sanjay Jha. They're the promoters.
Okay.
And if you look at it, LetsVenture is a platform, a marketplace for raising angel money for early stage funding for startups, right?
Okay.
So small ticket investment, you start small, you explore that space, you learn new businesses, you meet a lot of new people. I think that's how it all started for me. The excitement to learn new things, the excitement to meet a lot of new people. Obviously now I think since I'm 40 plus, I think the idea of meeting youngsters with brilliant ideas was very fascinating.
Yeah.
So I think that is something which really enticed me in that space. And obviously with the kind of learning and experience you have gained over a period of time, was able to at least add some value in terms of, getting them on the right track. Because a lot of these guys are very passionate, right? If you see the ideas, they come with a very full of passion. But there is some direction in terms of the business plan, finances.
They do. We'll talk about that
exactly.
on the second side. So LV Plus, go on.
Yeah. Now, as I said, right, LV started in 2013 as a marketplace for early stage startups, angel investments, right? And if you see in the history, LV has done 270 plus fundraisers, right, raising almost $150 million. And this has been done from 6,500 plus investors on the site, right? HNIs and ultra HNIs on the platform. And there are 150 plus family offices as well, right? Now, if you look at that, you had on one side, HNIs, ultra HNIs and family offices interested in investing in private markets. And on the other side, you had one offering, which was early stage. So this idea to bring in the growth stage, going all the way to unicorn, is what you want to cover with LV Plus.
Okay, understood.
So our idea is to be the first port of call for any investor who wants to invest in private markets, right from early stage to unicorns. Yeah, and that's how you want to cover that entire investor side of things. And on the startup side as well, you want to cover that entire capital ecosystem that is sitting out there.
Got it. So Nimesh, the thing is that you mentioned 2014, 2015, and that's actually the inflection point, right? Because if I remember this correctly, by 2016, 17, everything was just blowing up. You had a lot of large deals. Paytm also became big. Same with Flipkart. You had a lot of big deals happening. And that really got a lot of attention from individual wealth investors and family offices. Okay, this family office concept, of course, is relatively in India, because if you look at the original investors in startups would be venture capital funds, private equity funds. But here, the private market has exploded in the last few years. You've got HNIs, ultra HNIs, family offices who are picking up a lot of large stakes in startups. And to facilitate that, obviously, because that market was served typically by your wealth managers, people who have a long history of having built relationships with these HNIs and ultra HNIs in that market. And you would know from Kotak, because Kotak has had among the largest wealth management books. So you know that. So given how the space has progressed, which is traditional wealth advisory firms stepping into private markets to route HNI money into startups, how is LV Plus different? What do they do?
So if you just see how the market is performing, right? You have obviously the large wealth managers who offer you a certain amount of opportunities. And the way we look at ourselves is that we don't look at these guys as competition, right? We are looking at partnering with some of them. In fact, we have done some partnerships with quite a few of them. The idea is that we should be the port of call for any kind of investment in this space that you are looking at, right? So that's what. So it's basically, the idea is to completely democratize this marketplace, right? If you were to look at it, say 2013, 14, in very early days, it started with few marquee unlisted investments, which was in the pre-IPO phase, right? That's how the market started. At that time, the valuations were dirt cheap. But when 2018 is when the valuation jumped up, right? And that's when there were a lot of unorganized brokers that came into this place and were settling trades with spreads in the same construct, right? Our focus here is to be very transparent, right? Our focus here is to get opportunities which today the HNIs and ultra HNIs would not be getting. So it would be more like an exclusive arrangement, right? Because if you see, many of these get covered in a very small coterie, right? If you look at it, all of them, and if you also look at the space, the venture funds, which earlier were looking at larger transactions, are going down and down and down the curve. So there is, and most of these are international funds, right? So there is some need for domestic capital also to come in, some need for larger participation, and as well as what has happened on the family offices side, that is also an evolved concept, right? It's evolving, and we are still in very nascent stage. We also saw in the last 5 years a lot of families having the second, third generation coming in the age group of 30 to 45, who are well traveled, have a very global perspective. So these guys have a long-term holding horizon as well as higher risk appetite. So they want to diversify into private market investment. And, especially startups where they can, in addition to doing the traditional investment, they can also add value in terms of mentoring. They can add value in terms of opening doors, networking.
Fantastic point. Let me get this right, okay? I'm thinking that you've got the first generation entrepreneur who has set up his business over the last 20, 30, 40, 50 years, whatever it is, okay? Then maybe you have the second generation or the third generation who by this time may or may not be interested in the family business. He might be. So you're saying that this person now, who probably, I don't know, could be foreign educated, like you said, very well traveled, has a very different perspective from his father or his grandfather. You're saying that this guy now has a very big interest in diversifying from the family business. Tell us something more about it. I find this really interesting.
So not really diversity from the family business. I think family business is going on, right?
That's going on.
So from the investment perspective,
I don't mean that he's, So just let me clarify. I don't mean that he's leaving this, which could be of anything, but I'm saying that it's just very interesting that this person who has a fairly large business on his own is now interested in investing on this side. And tell me two things. How has this trend shaped out in the last few years, and what value do these guys bring to the table?
So, see, two things, okay? So, exactly two things. The answer to the question is, one is that people have started building a professional team, right? It is not anymore. See, if you see public markets, there is enough amount of research available. There are basket full of brokers available. So, you have all the accesses in the world possible, right? When it comes to private markets, the information arbitrage is huge. Correct? There is a lot of asymmetry of information. So obviously you need specialized people. So if you see what family offices have been doing is they've been getting people onboarded from some of these venture funds and all. Obviously the larger ones get professional people in. So they can evaluate each transaction professionally, right? So each opportunity is evaluated in that manner. And second is, say, for example, it's a FMCG family, right? Just for an example, say. And there is an interesting FMCG opportunity that has come up. So, in fact, they will not even, one part obviously is looking at investing and anchoring the transaction, but they will go all the way to hand-holding the startup to get to a growth stage, opening a lot of doors, mentoring them. Even, in fact, quite a few family offices now have their own incubators and accelerators also in place.
Okay.
So, you are seeing all of these happen, right? The market is evolving. The interest levels are evolving, but having said that, I think it's still too early in the cycle to say that it's, we have arrived. I think it will take us a few more years to get to a stage where the private market will be, there will be large pool of liquidity and accesses across the board, which will help us reach that stage, when domestic capital will also have prominent say in this.
Yeah. So help me understand this, okay? Before this explosion in HNIs, ultra HNIs, family offices in the startup space or private market space, this was traditionally done by the big boys, the Sequoias, the Matrix, and the Axis and the Tiger Globals and whoever, and those guys are still there, right? Those guys are still there.
Yeah.
But this new type of investment has come in, giving probably more options to founders. Can you give me the difference between both of these? What do the big boys bring in, and what do these guys bring in? How does this differentiation work? I could look at it as a founder. Let's say that I'm someone who wants to start my own podcast firm. How would I differentiate between these two guys? These two.
See, there are exactly. So there is an easy way to look at it. I think both are very, very supportive for the system, and both bring in their own complementaries to the system. If you look at a fund, they will largely come as a top down, right? Because they know the marketplace, they know the entire network, they know how things work, right? And if I were to look at someone who has run the business, he brings in bottom up expertise. So it's very complementary in nature, and if you have both on your cap table, I think it's a very ideal thing to have.
Sure.
If you have both the expertise together on helping your startup, right? So I think it's very complementary, and it works in the favor of the startup. One will bring in global, and one bring in local. So that adds a lot of value.
Understood. Okay, understood. And what about the HN? I mean, the family offices. Are you saying that they would strengthen the already local flavor that's there in the venture?
Yeah, exactly. So they bring in the bottom-up expertise.
Understood. Understood. So for both the sides, yeah.
Correct. It's not easy to do business, right? In
yeah. No, I'm just thinking, like you said, the information asymmetry. Right now, let's say that I'm someone who's starting his own beverage thing. Okay. Beverage is a very big space for the Pepsis and the Cokes of the world, but there is enough space at the bottom and at the mid. But the problem is getting information about it. So I'm just trying to figure out how does this entire equation work. So you're saying that so just give us a flavor of that before we kind of start wrapping up the first half.
So you take, say, for example, the beverages space, right? So I think you need distribution tie-up is one of the most important things that you need for beverage business, and you need marketing, right? So these are the two things where any investor can contribute for your business in terms of, because you obviously have the technical know-how, you have your tie-up of bottling, you have your tie-up of how do you do it. But I think marketing is where you have to judiciously use each dollar that you have on the capital side, right? And getting the right distributors for your product to do a pan-India distribution and on timely and, all of those nitty-gritties there.
Sure.
So that's where the value addition will come from the investor side.
Understood. Okay. So that's, just last part of this first half. What's been happening? This entire crisis is now more than 3 months old for India and 6 months old for the world. What's been India specific? Okay, now I'm not talking about the world, but how good or bad are things? Is the entire market frozen? A lot of people we used to talk about winter is coming even before this crisis. So what's your take on what's happening, and maybe a little bit on what to expect in the next few months on that? Yeah.
So, yes, obviously, some amount of cash has dried up in the private markets. I think that goes without saying. We have done an internal survey, and obviously around 40-50% of investors have taken a pause. But I think if I were to look at the silver lining here is that there's a lot of interest coming in what we call in the startup world as COVID positive companies, right?
Okay.
The companies which have benefited because of the lockdown where it has increased the...
So you're saying positive from that perspective. I'm scared for a minute. Okay.
So where you are seeing, say, you take, for example, EdTech, right? You take MedTech. You take online gaming, digital consumption, right? Some of these areas, I think the demand has just surged. The user base has surged, right? The revenues have gone up. So obviously people want to look at opportunities there, right? And in fact, we are running transactions as we speak on some of these, and which is where our focus is as well. Second thing you are seeing is that, obviously some amount of VCs have now slowed down on their investments where they're committed, right? Where it's in different stages of commitment, and quite a few guys are coming to us requesting us if we can do a bridge round, which can help them, wait the crisis for the next 12 months. So you're seeing very interesting propositions. You're seeing interesting opportunities out there. And if I were to just take a minute and take you back to 2008.
Please.
Right? 2008, we had the global financial crisis. And if you look at the number of companies that were incorporated at that time, today they are one of the largest companies in the world. So Uber, Airbnb, and the list goes on. Many of these were started in 2008, right?
Wow.
So I think there is obviously opportunity when there is adversity. Many of them are capitalizing on that, and you are seeing good amount of interest coming from that side as well, as long as the valuations are reasonable and you have the right company.
Yeah, I mean, you've got India's largest publicly listed company that has raised, I have no idea how many billions of dollars in this lockdown. One thing that I used to always, one thing that we talk about is, isne due diligence kab kiya? Because he's Can you answer that question for me, just as a purely curious question? How has he managed to do this, man? Yeah, amazing.
So yeah, I think it's been phenomenal the way things have happened. But I'm sure any transaction that you see that happens, and obviously at this scale, it takes months of work, right? So I wouldn't be surprised that it would have taken obviously months to get this going and done.
I'm sure. I mean, guys, we were talking about Reliance Jio, by the way, which has lost count of how many deals he's done and how much he's announced, and all throughout this entire crisis. So, folks, that is a wrap on this first part of our private market special. Our guest, Nimesh Kampani, president at LetsVenture Plus, or just LV Plus. We finished the part about LV Plus and the work that they do, the services that they offer, and how they operate. On the other side, we're going to talk about something very, very personal. Okay, personal to founders and personal to investors. The investor-founder equation. It's a really, really, really tricky one. And if you guys want to know more about how Nimesh looks at each side of the equation, because remember that he's someone who provides a platform and he knows both sides of the game. So we're going to talk about that exactly, and it's a very interesting topic. So don't go anywhere. We'll be right back with the private market special.
Hey everybody, welcome to another great week on the IVM Podcast Network. If you're not following us on social media, please do. We're IVM Podcast on Twitter, Facebook, and Instagram, as I'm sure you know by now. I would like to thank our sponsors this week, Paytm Money and Intel. They've been extraordinary sponsors and we couldn't appreciate them more. It's been a really, really cool week on the network. We've had Ashwin Sanghi on Cyrus Says. We had Paisa Gupta on Advertising is Dead. You should definitely check out Vivek Lath, who showed up on Storytellers and Story Sellers. A close friend and partner of ours, Karthik Parija, was on the Pragati podcast talking about the future of podcasting, which I think is really, really interesting. And I would like to ask people to check out All Things Policy and what they've been doing. They've been having some really interesting discussions about India's challenging relationship with China as we go forward. And I think that would be a great thing for you guys to check out. So with that, let's get you back to your show.
And welcome back to this special episode of Paisa Vaisa, the private market special. My guest, Nimesh Kampani, president at LetsVenture Plus. On the first half of this episode, we were talking about what it is to be a bridge between investors and founders, which is what LetsVenture Plus is, LV Plus is. They build a nice little platform on which you can, you have both the people on both the sides, and LV Plus helps both the categories. And now we're going to talk about exactly this, the investor-founder equation. So, Nimesh, let's go straight away into this. Who, as per you, is the ideal founder, and what do you personally look for? Okay, and please don't give me stuff like someone who wants to change the world. Everybody wants to change. Tell me what's the ideal founder.
So I'll tell you what I have seen in my experience, right? Having met so many founders through my as an investor phase, right? Not as the person who's looking at LV, but I'll tell you what I would look at when I was an investor. So obviously, you do your basic tick marks on honesty, integrity, motivation, stuff like that. But one very important thing that you have to look out is the person should have business sense, right? I've come across a very passionate founder, right? The founder had brilliant passion. The founder had put in own capital and somewhere around $1 million into the company, right?
Wow, that's a lot.
Created a lovely product, right? But there were no tie-ups, right? There were no customers. There were no tie-ups on the vendor side. It was a marketplace platform, but there was no business into it, and you had already put in so much money, right? So obviously that is a typical recipe for disaster. So I think a typical passion is good, passion is excellent, but you need to have an idea on execution, right? And that comes to my next big point on vision on execution. I think that is one thing I look forward to, is that the person should be visionary in terms of where they want to take the firm, right? What is their thought? How are they going to execute? And how is it going to reach where they want to reach? It's very easy to say, I'll get to 1 million customers, right? But when I ask you what is the cost of acquisition of a customer, you don't even have an idea about it. And this has happened, right? I'm not kidding. This has happened.
Yeah, actually.
Yeah. So I think it's very critical to have, obviously, ideas everybody gets, right? Everybody solves a problem. We'll try to solve a problem. But I think execution is the key. So at the end of the day, it all boils down for me to the three P's. The three P's being promoter, promoter, and promoter, right? You need to have the right promoter at the helm running the business. And then everything else will fall in place, right? And one typical big no for me is a person who says, kar lenge, dekh lenge. I think the jugaad attitude is something that I will never put my money behind.
I actually want to ask you about that. You're someone who would have met a lot of founders. I'm sure it takes you 5, 10, 15 minutes max to figure out ki kaun kaisa kya hai. What are your red flags? The 2 or 3 things that if you hear instantly you're like, okay, I think I should stay off this guy. I asked you what's the ideal founder. What would be the red flag here?
Giving me gyan on what is the global landscape for the product.
Okay.
Right? That is the first put off, because if you don't know what your product is going to do bottom up, coming top down will never help you. The market is so big. And I think that is also somewhere I've experienced that, right? When you're doing a pitch, the idea should be sold to you in less than 30 seconds.
Oh, seriously, 30 seconds? Come on, yaar. They used to call it the pitch, so we used to get at least a few minutes. 30 seconds so 30 ज़्यादा हो गया.
नहीं, मेरे को problem or solution बताओ ना, at least to get me interested. Right.
Okay, understood.
So you get me interested. If you lose, either you get me in 30 seconds or you lose me in the first 30 seconds, right? And then obviously it comes down to your execution and how you're going to do and stuff like that. I had one promoter who had come to present, and I timed it. And I told him that after 35 minutes, the only thing you explain to me is the problem.
Okay. Okay.
So I think it's critical to have your problem statement and your solution done in such a simple manner that the communication can be done in a very quick time.
ठीक है, Nimesh, fine. Now you told me the investor side. ठीक है, चलो. I have got a grip on that. Now I'm going to put you in the founder's chair, okay? Because I have, in this 3 odd years that I've done the podcast, I've met a lot of founders. You would also know that now the startup space has become so big that हमारे जो ग्रुप में कुछ ना कुछ आपको ऐसा कोई मिल जाएगा जो अपना खुद का वेंचर कर रहा है, ठीक है? So I want to understand one critical thing, because this is something that I've got from the founder's side, okay, not the investor's side. See, both investors and founders now, they are aligned to the same goal, which is that we want to create value for the investment. Founder ने खुद का पैसा डाला है, or promoter. You call him promoter because I guess both of us have been on the public market side, but we are using promoter founder very, very fluidly. Yeah, that's what. So I'm saying that both of us are on the same side of the table. We are saying that we want to create a lot of value for the investors, and yet both of them go and face a lot of issues. I'm sure that you've also been through this entire thing. I feel that maybe founders have a preconceived notion, or maybe it's real, that all the investor wants is a rate of return. उसको सिर्फ चाहिए कि बॉस मेरे को 3 साल में तुम मेरा वैल्यू ट्रिपल करके भागो यहाँ से. Whereas I am founder, I'm here for the long term, boss. I am also handling people on a day-to-day basis. I'm handling distributors, I'm handling suppliers. So I want to understand how this balance works. And in your view, what are the top 2 or 3 priorities, 2 or 3 things that you think founders, should balance?
So I think that's a very good question, Anupam. And what I've seen here, I think somewhere the falteration happens there, in terms of you have the money, you put in your own money and you do something, or you don't have money and you try something and it blows up. So I think this is the advice I would give to every founder that is out there. And in fact, as we speak, my wife is in a process of getting her startup going. Which is what
all the best. Very good. All the best. If it is in the area of personal finance, please come over to Paisa Vaisa. Sorry for plugging my podcast there. Okay, go on, please.
So I think the first thing that is very important is the hypothesis, right? You have found a problem, right? Which is what you are trying to solve. Now do some hypothesis. You have to keep on doing experiments on what the hypothesis is. Try to get your yes and no answer. A lot of experimentation goes, and ultimately you have to find a demonstrable result, right? You have to get out whatever be your product, in whatever your solution, in something that you can show that it works, right? That is one. Second is you need customer validation, right? It something looks very good to me, something looks very good to my friends. Yeah, my friends are not the real evaluators of my product, right? Because I don't think so many of them will even tell you on your face that what you're doing is wrong. So I think getting a customer validation, whatever be your product, whatever be your service, do some survey with your potential customer base, do some discussions, get their inputs, right? I think one of the biggest fear I have seen is that people think their ideas will be copied, right? That's okay. It's a valid fear, but I think it goes to the extent of paranoia that I don't want to talk to anybody till I don't bring out my final product. I think talking to people, getting customer validation is very important here, right?
Okay.
That is the second point. Third, I would say is getting the right team, right? A single founder company is a strict no, right? I think no investor would look at it because a single founder company will struggle for scale.
I was going to ask you about this, but I'm glad that you got it up. Please expand on this because I've had this conversation with a lot of people who are, who have a great passion, but they always run into some kind of block. And then they start to look for co-founder, mentor and stuff like that. So I want to talk a little bit more in detail about this.
Yeah, so do it as early as possible because as a single co-founder, you have 24 hours in a day, right? You will stretch and work for 16 hours, right? So that will limit the growth of your firm, of your company, right? Because you cannot do everything. You have to find a complementary skill and you have to work on the concept of complementary genius and work together with, say, one or two other people. And that's the only way you'll be able to achieve scale, right? Because, running your own startup is something that's a very, very challenging role, right? You have to go and buy a pen also and you have to go and sell your product also. So with the limited 12 to 16 hours in a day, there is only so much you can do, right? So I think being a co-founder who is with a complementary skill to yours really helps. Say you are in, say, your personal finance business, right? If there is a sales guy, a business development guy, that guy will need a skill set of an operations guy, right? Who understands the nuances, who understands the finances, right? Because the business guy understands sales. Yeah. Obviously, they both cannot double up on each other's role. Otherwise, you'll never get to a scale, right?
Correct.
So I think it's very important to have the right team and right from the very beginning. And right team would also include getting a right mentor as well. Do it as soon as possible. Someone who is from the industry, who can guide you, who can, whom you can go and call at all odd hours, because you are going to face stumbling blocks at every nook and corner.
Very interesting. How easy or difficult is it to find this kind of a co-founder or a mentor? I mean, what would I have to do? If I'm someone who really, how do I start building these networks? I mean, do I just go to LinkedIn and just do a search, or how does this work?
I think normally it's people who either you studied with or you worked with, right? So it's either in some acquaintance or a friend circle that's what ultimately starts with. And as you, I think, grow and you see, I think one other thing that I missed mentioning, if you have an idea and you want to work on making it big, you keep yourself a target that in the first 30 days, you'll talk to 3 people in a day. It can be from anywhere. It can be a vendor, it can be a supplier, it can be a consultant, someone who has experience in that particular field from whom you can have some learning, right? You take down 1 or 2 points, and that's where you'll realize that what is the skill that is missing when you are starting the entity that you are doing, right? And that is the kind of skill you will have to look for, and you'll get someone. If you have some experience in that space, you'll definitely find someone in your sphere of connections, right? And in this N+1, N+2 connections, mil jayega. I think normally, typically, that's how people find co-founder. Either they have studied together in your famous IITs and IIMs, or they have worked together, right?
हम लोग दोनों तो चार्टर्ड अकाउंटेंट्स हैं यार, हमको तो कोई आईटी है का पता नहीं, but you know the CA network. Okay, let me not go there, but very interesting. So folks, I hope that you got you got a tip out there that if you're someone who's looking out, I mean, first you should definitely look out for a co-founder, and you should definitely look out for a mentor. That is what Nimesh is saying. That is something that is on his list when he looks at founders. So Nimesh, tell me, what kind of lead investor are you? If I have founders who are listening to this podcast right now, to this episode right now, what can they expect from you? Maybe, who knows, somebody reaches out to you with a pitch. What kind of lead investor are you?
So I think a lot of strategic thinking, a lot of visionary thinking, business planning. I think that is what my core is. Obviously, finance. So across the board on entire financial planning, opening a lot of doors. So all that is something that can be done at my end, right? And that is what something I've been doing for quite some time. I think larger role on the strategic vision on how to grow and where to grow, and opening the right doors. So that's something you can look forward.
How do you do the matchmaking out here, yeah? Because you're a platform. Just tell us briefly, maybe what's the process at work out here. I mean, because I'm sure that there is maybe there's an algorithm, or maybe there is some own personal intuition that goes into it. What is the process? What's the backend like at LV Plus?
So what we do is, I think there is a lot of curation that goes on, right? We get a lot of incoming requests, and a large amount of requests comes in the early stage, right? So I think when we do early stage at a future date, I think we can go much deeper into that. But I think there is a detailed curation process in terms of what kind of startup are we looking at. Obviously, secondary also we talk to a lot of people from the industry. We will talk to people who are investors themselves. We have relationships across funds. So it depends on the kind of investment opportunity and the kind of investors also that are coming into that particular round, on the basis of which we do all the testing. So if you're doing, say, a pre-series A round or something of that sort, I would definitely talk to all the earlier investors, right? Obviously, we would have the connect there to understand the genesis on the basis of which they would have put in money and what has been their experience. Right. Sure. I'll give you one example there, and why would you want to do such a thing is that one of the startups that I was looking at investing, right, was doing a second or the third round, and in the earlier round, obviously they've got some investors in, and when we spoke to them, I was told to just stay away from that, right, because what they'd done was they raised money from that small fund, and the fund then planted one of their persons as an employee, who found out that all the numbers were all jugaad.
Oh, right? Wow. Oh, okay.
You have to be careful, right? You have to be careful, right?
Oh, man.
So I think so. So there is a lot of curation goes. We do detailed due diligence. I think we are the only ones who enable that, right? We just don't do, as a platform, there is a due diligence process. So every primary fundraiser that we do, there is a financial due diligence done. There is a legal due diligence done, right? So all of this we take care of at LV, and we help the investor put in money there. Right? We get them to talk to the promoters. We get them to do all of those things as
well. Okay, chalo, theek hai. Final question. Learnings from your namesake, okay? Because there is another Nimesh Kampani there who's senior to both of us. Your take on hot sectors, from your own experience, which is very long. Like you said, you remember how in 2008 the companies that were formed out there, the Ubers and the Airbnbs, and probably in this crisis also you'll have a lot of similar big brands that are going to be formed. So let's just wrap up this entire recording with your take on hot sectors and your own experience.
I think I would look at, as I had mentioned earlier also, right? The COVID positive sector, I think, is where you are seeing that what the new world will be, no one knows, right? Will work from home become a reality, or it's just temporary? No one knows, right? People will have views there, but I think there is no thing that it's definitely going to happen. But I think some of the segments that are doing very well is all the digital consumption story, right? Where your home delivery stuff happens. The online gaming has picked up. Education is pretty much moving online. So you're seeing a lot of edtech happen there. Medtech as well, right? Healthcare and medtech, I think a lot of online stuff is happening. I think these are some of the segments, I think, which should do pretty well. I think there should be some shift, if not a paradigm shift, but definitely some shift from physical world to the digital world. And that would be enough for these guys to grow very well and do very well. So I would be a positive on these.
Sure.
That is where I would, and obviously some amount of fintech, right? Whatever is platform based, I think you would see some amount of benefits coming out of that. And my learnings, I think, so as I said, so what I believe in is that everybody and anybody that you meet and you come across in your life is a shade of gray, right? it's important to pick up the whites and ignore the blacks. I think that's the way you would look at each and every person that you meet. So that would be my learning from my experiences.
Fantastic. I think you guys, at LV Plus, I've been telling you this before this recording also, that you guys should be setting up your own podcast, because you have a lot of learnings. You guys have a lot of interesting anecdotes and stories to tell. So I hope you guys do that. And when you do, look forward to hearing that. But folks, that is a wrap on this episode of Paisa Vaisa, the private market special. My guest, Nimesh Kampani, president at LetsVenture Plus. Nimesh, thank you so much for joining us. I hope we hope to have you back.
Thank you, Anupam. And yes, we'll touch base on what we have discussed. So
thank
you so much.
We should have a follow-up by the end of this year to see how things have panned out. So thanks so much for doing this.
Thank you so much. Thank you.
Listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcasts.com. You can also follow us on our social media. We are IVM Podcast on Twitter and on Instagram. If you want to reach out to me, I am B50 on Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Advertising is dead. Yep, you heard me right. Advertising is dead. We're all in the content business now. Let's not call it news, TV, radio, etc., etc. It's all content, and we're in the middle of this weirdly exciting phase where all the borders and lines that have been drawn over decades has been swept away by this lovely thing called the internet. We're a show where we don't dwell on just the stuff that is now, but rather the wider stuff about advertising, media, content, and the whole goddamn circus surrounding it. Tune in every Tuesday for our weekly unboxing of the mystery box we used to call advertising. I'm Varun Dugirala, co-founder and content chief at The Glitch, and this is my new podcast, Advertising is Dead.
रिश्ते में तो हम तुम्हारे पॉडकास्ट लगते हैं. नाम है फुटबॉल शुटबॉल. Presenting Football Should Ball, a show about three friends discussing our favorite game over a beer. Sometimes 3, maybe even 5. Hi, I'm Shiva, and with me are my two sidekicks, Gaurav Sapre and Karthik Iyer.
Sidekick? You mean like Batman's Robin or Van Persie Robin?
No, I mean like Alexis Sanchez, but with a little more skill than just playing the piano.
Just shows how the best players at Arsenal are mere bench warmers at United.
Oh, thank you, Iyer. But you're a Fulham supporter, so whenever you say anything to support me, I question my beliefs.
Just like how Griezmann would say, एक बार मैंने जो decision ले लिया, तो मैं अपने आप की भी नहीं सुनता.
Banter aside, we will talk match reports, transfer rumors, top controversies, fantasy football picks, and so much more. So grab a beer and tune in to Football Should Ball every Wednesday on the IVM Podcast app, website, or wherever you get your podcasts.